Hello, everybody. This is Toni Turner, and welcome to the market now as about noon Eastern on Friday, January 26th. The Dow Jones Industrial Average opened at a record high yet again today, powered by gains in chipmaker Intel, which jumped 7% after strong earnings results were announced last night. AbbVie rose 6.8% also, after reporting upbeat profit on strong sales for its blockbuster drug Humira. The Commerce Department said in its advanced fourth quarter GDP report that the gross domestic product increased at a 2.6% annual rate. A Reuters poll of economists had forecast the economy expanding at 3.0%. On that news, let's go forth and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our S&P 500 benchmark index, and it's easy for everyone to get on their screens, as some people have kind of a hard time getting the SPX or the S&P 500 index itself on their screens. Now, we're looking at the SPY today. It made another all-time intraday high today at $284.93 on this candle right here. When I captured this chart, it was trading near that number at $284.59. That's about 28.45 on the S&P 500 itself. Yes, and yes, another new high. If we look at this chart here, we can see that the SPY, of course, at new highs, is obviously trading at quite a premium to its 20-day moving average, which is coming in at 276. Also at quite a premium to its 50-day moving average, which is coming in at $268.74, and at a nearly 13% premium to its 200-day moving average. That's quite a high premium to this very important long-term trend line, the 200-day moving average. As you can see, the SPY is trading very high above these moving averages. So it's something I'm really watching here. It's good news. Certainly, as I always say, we can't argue with success, but we do need to be wise that at some point profit-taking will come in for whatever reason. Just could be profit-taking or from some other news event. Now, if we look at the 14-day RSI down here on this scale, as I've told you before, when the RSI is trading above 70 on its scale, and right now it is trading at 85, which is, of course is quite a bit over 70. The RSI is trading at 85, very overbought on its scale, and that means that, of course, more people are much more long the SPY than not. At some point, I've never really seen it stay up this long, the RSI above this 70 line, and at some point, of course, over and we will come down here, but we'll have to see when that happens. So far, I'm continuing to enjoy the ride while I trade with very firm stops, and I'm still taking some profits off the table. Earnings season, we're still in that as we continue through it next week, as the main movers and shakers keep announcing fourth quarter earning results. Of course, that will continue to move the SPY as well. And as I'll mention to you at the end of this, toward the conclusion of this session, we do have the FOMC meeting next week that could bring some bearing upon moving on the SPY. So with knowing here that the RSI is overbought, the MACD is up near the top of its scale, let's be wise here. Let's trade normally and enjoy the ride, but let's trade with stops. And if you have a oversized position in a big momentum stock that you could take some profits on, now may be a good time to start nibbling away at those profits. Our next chart today is a chart of the PowerShares QQQ. As I tell you, in Tony's Market Club, we watch the QQQ as the representative of the NASDAQ 100, which of course is a very important index in the market. Of course, the Qs are moved by the likes of Amazon, Facebook, Microsoft, Intel, and of course Intel's earnings last night helped hold the Qs up today. When I captured this chart, the QQQ was trading at $169.71. Again, it is trading like the SPY at quite a premium to its rising moving averages that are coming up underneath. As we look at the 14-day RSI here, we see that it is overbought. It's coming in at about 79 on the RSI, not as high as the SPY, but still overbought and has been so for a while. Again, I've rarely seen the RSI remain so overbought on the indexes for such a long period of time. It's really unusual, and it's very interesting to watch. However, please know with me that high momentum stocks, high growth stocks, like these big, like Amazon, like Facebook, like Microsoft, so forth, fantastic companies they are, but also know that high growth stocks, when the market does start down, and it will at some point, these stocks tend to fall 2.5 times faster than do value stocks, from 1.5 to 2.5 times faster than do value stocks, which tend to be a little more conservative. So just stay wise and trade with stocks, and of course enjoy the ride while you're doing so. So we'll keep an eye on the Qs here to see if it can go and stretch a little higher, or if it needs to come down. There's support here at about 163 at the 20-day moving average. Certainly there's price support here down at about 162. We have more price support or moving average support coming in here. The 50-day moving average is now at $158.74. We have price support there as well. So all kinds of price support on the Qs should it need to come down here and take a little rest. Our final chart today is a chart we haven't looked at in quite some time. It's been pretty beaten up lately. And one of the reasons is that the Fed has started raising interest rates. We're looking at a daily chart of the iShares US Telecom ETF, symbol IYZ. Some of the top components in the IYZ are Verizon, AT&T, T-Mobile, Sprint, Vonage, and TDS. Now, the IYZ has been falling here because a lot of the reason is telecom stocks are considered to be kind of like utility stocks and REITs, in that they usually provide their shareholders a really good dividend. They're called bond-like stocks because that's what they do. Most of them are more toward value stocks, not so much toward growth stocks. And as the Fed has been raising interest rates, that has, and which means U.S. bonds have kind of taken over the place here of telecom and REITs and utilities. The prices of these very conservative companies have tended to fall over the last few months. So we've seen the IYZ fall here. And right now, let's see where my cursor is. Right now, as we watched it fall from the highs up here in June, about $34, all the way down to the lows here in this past November at $27.24. Since that moved down, the telecoms then did pop back up over their 50-day moving average, fell back down again. And in the last couple of months of December and now January, the IYZ looks like it's healing a little here. Now, with so many sectors overbought at the moment, it was really hard for me to come up with one that had room to move higher. I hate buying high and selling low. I really would rather do the reverse. So with that in mind, I'm looking at telecom here as a sector that may start higher. Some of these companies are some of the top telecom companies, or some of the top tech companies, I should say, in the world. So I'm looking at these at the IYZ. If it has possibilities coming into the coming week, it's now been consolidating above its 50-day moving average, the green line, and its 20-day moving average. If in the coming week, and when I captured this chart, the IYZ was trading at $29.53, as you can see, right above its 50-day moving average. If in the coming week it can break above this consolidation line here that it's been working on for the past really month, if it can break above that and head to 30 in the coming week, I'm going to add shares of it to my portfolio. I think it has some good upside here. It certainly has room to grow. And not saying this will happen, but it certainly has the room for that to happen. The RSI here is neutral, as is the MACD. So again, in the coming week, if the IYZ moves higher, I will add shares to my portfolio. Now, if we have a market pull down, or if telecom falls for whatever reason, and the IYZ closes below the 50-day moving average, which is currently coming in at $29.26. Should it roll over and fall below that line, I will exit the trade. That is my protective stop, would be a close below the 50-day moving average. So keep an eye on the IYZ in the coming week to see if it's a possibility for profits. And now on to the coming week's economic reports. But first, please join me this coming Monday, January 29th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that can become ripe for high potential trades. This is a great time to join Toni's Market Club because we just don't know which way the market's going to go in upcoming weeks, and sometimes it's nice to have kind of a guiding hand. This is a low-priced, high-value opportunity for you to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. For this week's economic reports, and again, please remember we still have another pretty heavy week of earnings announcements. On Monday, we have PCE prices. Tuesday, we have consumer confidence. Wednesday, we have the ADP employment change, crude inventories, and in the afternoon about 2 o'clock, the all-important FOMC rate decision. Thursday, we have jobless claims, the ISM index, auto and truck sales, and our usual natural gas inventories. And on Friday, we also have important numbers. Those are the jobs numbers, along with the unemployment number and the University of Michigan sentiment numbers. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.